Welcome to the Swing Trading with Cycles channel. It is December 29th, 2022. So literally one last trading day left tomorrow. It is Thursday night, last trading day of the year, Friday to start tomorrow. We're going to look at precious metals tonight. So this is the chart of gold. We've been talking about this 8-year cycle, the 30-year cycle, the 16-year cycle. Let's just look at the data together quickly. So this last 8-year cycle, which is hard to dispute, is a thing, started in January 2016. This is your candle, that January 2016 candle. That was your low in That was your low here in December 2015. So the low was 1046.54, right, on this candle. I'll just zoom in, make sure everyone can see this, right? That's your candle that marked a low. This one took over. And once we crossed above the high of this candle, that's a swing low, folks. So important to understand. If you're new to this channel, then understand a swing low is what starts an uptrend. A swing high is what starts a downtrend. So you want to buy after a swing low and you want to sell after a swing high. It's really, that's what the market does. Just from swing low to swing high to swing low to swing high. So this is our last major swing high, December 2015. And then we have our big up candle, January 2016. And then huge follow through, February 2016, right? And then some nice up move. And then a huge back test. Scary stuff. I mean, look at this. That's 1 month, 2 months, 3 months, 4 months, 5 months of decline. That sucks. But if it's a 8-year cycle, we're talking about 80, 90 months, right? So a 5-month decline is actually, especially really early, is actually shouldn't be that bad. But then we also kind of meander for the rest of this period. Not great. But then we have this huge up move, which is great. So from like sort of, if you were able to buy the Pico bottom, peak to trough, that was a 98% gain. And I'm gonna send a tweet out. If you're not following on Twitter, definitely take a look for a link in the description. But this is just a data-driven way to look at the last 8-year cycles, right? And so this cycle, like what we just looked at, 98% gain. The one before that, 182%. The one before that, 310. Let's look at the charts that show that, right? So that's the other one, right? That's the one that we just talked, like, so that's the, right, so this is just a little bit miscount. Oh, sorry. I'll go back. So if we zoom in here, right, if we go a little bit higher, get the right Pico top, right, you get to something like 180%, right? And yeah, right, this isn't, right, there we go. Pico bottom. Right, so that's your 180%, and this is your 300%, right? So again, every cycle has an advancing phase and a declining phase. If you're not familiar with the cycle analysis, take a look for a link in the description. Take a look at the playlist. There's a ton of content I've created around that. This is your cycle advance for this 8-year cycle. And then we had like a really mild decline. Kind of amazing. And then this is your cycle advance for this next 8-year cycle. And that's your decline. Not so amazing, right? Like you have this advance and then this decline. So like just like really making it really basic, you did that and then you did that, right? So you didn't give it all back. And now you did this. Right, so actually, that's probably the best way to really instantiate it, right? Like if we just think about it as that kind of uptrend, right? So we did from here to there, and then we had a really mild decline into an 8-year cycle low. And then that's our next advance, that's our decline, that's our next advance. That's the one that topped out for in the COVID high, right? That's our 98% gain. And is this our low? Or are we making a lower high and then this is going to be our low and then we move out of that, right? So that's the question that we're really trying to answer here. We're going to have to see. We're going to have to see price action. The good thing is we're talking about higher time frame signals. So we're going to get cues on the lower time frames, because you can't have a bearish monthly candle without a bearish daily candle, right? That's how it starts. You have daily bearishness that cascades to weekly, then it goes to monthly, then it goes to quarterly, etc. And so again, the base case is that month 83, which is September 2022, is our 8-year cycle low, and we're now advancing. And it will also be sort of a, you could call it a half cycle low of the sort of the 16-year cycle for all intents and purposes, right? But if we zoom in here and we think about the weekly chart, that's our low that we're trying to hold, that 1615 level that kind of marks a sort of triple bottom kind of situation. This is incredibly bearish, no matter how you kind of put it. Like this is not a healthy uptrend, right? Like, look at this thing, right? It's like you're moving higher. The price is absolutely moving higher, but there are no like clean lower. Like this is a healthy uptrend, right? Something like that, right? Whereas this is just like kind of gone straight up, but yet it's obviously super unhealthy internally. You can see that. That's an ugly doji. That's a doji. That's basically a doji. like, so all that to say, there's going to be a drop into a lower low. It's just a question of how much, what can we hold, right? Like you see that, right? You can imagine, obviously, we're going to break below that. This is your 10-day moving average. And if we think about what that might mean for something like the daily cycle, that's why like things are very murky here, right? So we have this, like those triple bottom, that triple bottom that we looked at on the weekly chart, that's what that looks like on this daily chart here, right? So you have this low, and this low, right? Those are the lows on that weekly chart, just to be clear. That's the multiple time frame analysis, folks, right? Like that's this low, this low. I'll just zoom in and just make sure everyone's seeing the same thing. That's this low, and this low, right? That's all that price action consolidated into this candle, and that candle, right? So let's go back to the daily chart, right? So again, not to belabor the point, but that's this price action, that price action, and this price action. So, but we've emerged from that. And so now it's a question, you see these levels are the same ones that were drawn on that, those higher time frames. That 1734, 35 level we have to hold. That's our swing low. Once we breach that, then it tells you we're likely to go into the low 1600s. So you have to manage your risk there. Again, and look at this on the daily chart. My God, this is incredibly bearish. Why? Because this is an uncorrected uptrend, right? Like, look at this thing. There's no, like, and so you'll say, well, wait, there are like these lows here, right? Like, let's draw that, right? We can draw that. Well, wait, there's that, like, right? Inside it's happening, right? But, I mean, what's actually happening here is it's consolidating inside this bigger structure. And that's why you have to think multifaceted. That's why the multiple time frame analysis is so important. When you look on the weekly chart, you can kind of see the bearishness more clearly. And I get questions sometimes about, divergence and all that stuff. You'll notice in these, I don't use indicators. That's just not really a thing I do much. And not to say that they don't have any value at all, but I find that if you look at the price itself, it'll usually tell you what you need to know in terms of bearishness versus bullishness, right? In this case, this is obviously oscillating for a big move, and the probabilities are that move is going to be lower. Now, it could just explode higher, like we just get a nice big few candles, like boom, which would be great, and that's what we're going to watch for, right? But more importantly, silver is the thing one should be watching in terms of the move that we're about to make here in precious metals. So, and silver is a wild rider, and it's mercurial. It's tough to sort of pin down. Let's say that this was a daily cycle low right here on, that would be, what day is that? Oh, there we go. So yeah, no, that's not February 27th. So basically, this would be day 26 of that daily cycle, and if this were that daily cycle low, this move here would be 22 days, right? And if it's not, then basically it's 26 plus 22, so 48. So this is a potential top on day 48. The important thing here is that as I'm looking at this more closely, right, this is a massive double top, right? Like, this did not get quite to this high, because this high is 2406. Right. Yeah, so this high is just slightly higher than this one. And so that sets you up for a situation where, oh, wait, if this is our high for day 22, then we may be moving into a daily cycle low here. And it's getting squirrely because things are kind of moving in an unpredictable way. But at the same time, everything is kind of happening to the upside. Same thing is happening with gold, right? Like, again, going back to that gold chart with the bearish rising wedge is what you would call it. Like, that's what happens. Like, it's kind of getting unpredictable. And look at that in real time. I mean, this price is moving in real time. This thing is trying to make a higher high, like, right? It's trying to get above here, and then once it gets above there, it's got to get above 1818. And again, this is gold CFDs, not the futures, so different price, same price action. But that's important to understand, right? But for silver, we're pretty deep in the weekly cycle. That's really important to keep in mind, right? So this is week 17, right? And again, look at this thing. This is really bearish. Again, you don't need any indicators to tell you this is bearish. I mean, look at that. Look at these wicks, right? As the price goes up, it means people sold, right? Like, oh, I gotta get out. Like, look at this. Price goes up here, I gotta sell. Price goes up here, I gotta sell. Price goes up here. Like, you don't need an indicator to tell you people are selling, right? Now, could something completely reverse and we see something like that? Like, next candle is this, next candle is that, and then maybe. And I have such a small position size in an asymmetric bet that I'm ready for that, right? Like, but that's not something that you should necessarily bank on. Again, none of this is at any time financial advice, of course. But this is going to be really interesting to see how this plays out, right? But again, most importantly, think about that. This is week 17, and week 17 from what? From here, right? So we had this massive decline. What percentage was this? Let's just contextualize that, right? From this peak to this trough, 35% decline, right? And now we're rallying off of that. We rallied 38%, and yeah, as prices work, that doesn't mean we get back to the same price. But we're now starting to stall out, right? That's interesting. And it's been 17 weeks. That's a lot of time to rally. Remember, the last rally peaked out in week 6, the one before that, week 7, the one before that, week 7, right? So we're getting long in the tooth. And so it's going to be very interesting. This is where you really start to think about how you manage risk. And the last chart we were going to look at, well, actually, let's look at the monthly and quarterly for silver. And you'll see from my tweets, silver looks very bullish on the higher time frames, right? Very high, bullish. That's your monthly chart. I mean, look at that thing, man. That line is your 10-week moving average. This teal one is your 50-week moving average. So we closed below the 50-month moving average. It's your 50-period moving average, right? But this is a monthly chart, so it's a 50-month moving average. Notice we closed below it 3 months in a row. Right? Look at that. That's important to see, folks. We closed below it this month, and then we closed below it this month, and then this month, and then we rocketed above it. Closed above the 50-month and 10-month. Like this line is a 10-month, right? That more blue line. And then we got bullish follow through. We're going to get a pullback. We have to expect a pullback. That's how it works. You have weekly cycle declines within long time frame rallies, right? Now, how does the quarterly look? My God, look at the bullet. Like, look, so above that low, above that high, I should say, right? Man, look at that. Oof, right? Like that marks your swing low, right? Boom. Ready to take on the world kind of thing. That said, does have to take out all of that, right? Like there's a lot of resistance supply zone ahead, right? But very, very bullish start. GDX, last thing we're going to look at tonight. So GDX is looking not super bullish. So it topped out on day 27, made a low on day 31. So it's like, okay, was this a quick DCL? Still higher than this one, which is interesting. That's good. So we then rallied 1, 2, 3, 4, 5, 6 days, right? So this is day 6. That was Thursday, right? So again, this is December 29th. And so we now have a big inside day. Boom, boom. Those are our levels. High of 29.23, low of 28.74. And so what do we do tomorrow? So in reality, tomorrow we're going to be an inside day of an inside day, most likely. Right? We're going to be inside the range of this. So the range today was low of 28.74, high of 29.23. And so we're going to, that's actually maybe not exactly right. I think this thing is not cooperating with us in terms of tech. But the point is, we're a double inside day, right? Like we're going to open inside this candle, which is Thursday, which is inside this candle, which is Wednesday. And of course, be careful. It's low volume. But the point is, we're probably moving into a daily cycle low where this is going to fail, right? Like below this pivot here, which is kind of calling out this 27-25 area. Because all of this is consolidation above that big breakdown level. So we're going to have to watch that. So in general, cautiousness abounds. But as always, there are very clear levels of why to be more bullish or less bullish. So we're going to have to see what kind of unfolds over the next couple of days. And knowing that tomorrow is the last trading day of the year, we'll probably see something that's not necessarily something that can be extrapolated to the rest of the year, next year, is my guess. So we'll see. Thanks for watching.